Hope you and your families are doing fine and staying safe in the current challenging times. Let us hope and pray that we will soon be able to tackle this pandemic. Over the next few minutes, we discuss some of the key events of the recent past related to the Indian equity market and also present our views on the market outlook. The month of July 2021 was a period of roller coaster ride for the Indian equities, particularly for the large cap segment. Both BSE, Sensex, and Nifty 50 indices remained volatile but ended the month almost flat. However, NSE Mid Cap and NSE Small Cap indices moved up 3.1% and 8.1% respectively, continuing their outperformance against the large cap segment. On the global front, benchmark indices in Hong Kong and Shanghai were down as Chinese technology and education stocks plunged sharply on account of regulatory actions. US markets remained firm, led by strong corporate results. Globally, the market focus has once again shifted back to the concerns on continuation of growth given increased COVID prevalence due to Delta variant in certain geographies. The fears surrounding high inflation and its adverse impact on global interest rates seem to have been abated. On the domestic front, the ongoing first quarter earnings season hasn't thrown up big surprises yet. The current earnings season has benefited from a favorable base as recent lockdowns were localized and less stringent versus lockdown during previous corresponding period. The set of Nifty companies that have announced their results until now have delivered nearly 70% year-on-year growth in earnings as against expectations of about 64%. The margins, which were expected to be under pressure due to commodity cost increases, have held up rather well. The broader set of companies too have maintained this trend. However, unlike the trend witnessed in the previous 3 quarters, we may not see the continuation of earnings upgrade cycle as the earnings are sequentially lower than the last quarter of previous financial year. Among the sectors, cement and metals have outperformed, autos and NBFC segments have underperformed, and the performances of IT, consumer, and private banks have been in line with expectations. Among key trends, monsoon progress has been broadly in line after a weak start to the season, while GST collections for the month of June rebounded quite well with easing of restrictions. Some of the macro indicators, such as mobility data and electricity consumption, have already seen improvement, while retail activity is likely to gradually pick up going forward. We expect full normalization to take effect only after the containment of COVID crisis through lower additional cases and increased vaccination efforts. As far as our portfolios are concerned, we continue to focus on possible recovery plays that have room for higher than average market earnings growth, as well as possible valuation re-rating. During the ongoing crisis, there are companies that have focused on cost optimization and that have corrected their capital structure, which will aid their profitability significantly during the growth phase. We would like to remain invested or look to invest in such companies. Over the medium term, we see key trends such as, firstly, the likely shift in global trade and manufacturing in favor of Indian companies and away from China. And secondly, continuing formalization and digitization of our economy. Our focus will be to pick investment ideas from these emerging themes. On the valuation front, currently the large cap indices seem to be trading above fair value zone. The mid and small cap segments have also delivered sharp outperformance over large caps in the last few quarters and much beyond the expected fundamental improvement in certain cases. While we remain positive on Indian equities, we also recognize that the current valuation levels do not leave much room for any negative developments or disappointments. The delivery of earnings on expected lines will be very crucial for sustenance of current levels, more so for mid and small caps. As far as how to go about investing in equities, we believe that one needs to follow time-tested principles of regular investing and long-term focus. With expectations of continued volatility in the short term, We advise equity investors to make disciplined and regular investments with long-term focus and utilize periods of volatility to really build on long-term portfolios at better valuations. We advise investors to look at mid and small cap strategies from an overall cycle perspective and have an investment horizon of at least 3 to 5 years. Thank you so much. Happy investing. Stay safe.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.